Welcome back, traders. Welcome back to the channel. Welcome back to another amazing video. I told you in these videos I'll be showing you setups on different kinds of trades that we can have. So today I'm going to be, last video I showed you a drop base rally setup. In this video I'm going to be showing you rally based drop setup. So in the previous video we had this kind of setup. This one here, this is a drop base rally setup. It's a block of structure, and then break of structure here, and then price will come to a demand zone that is left here like this, and then price will buy from that demand zone targeting the previous high. So the whole setup is price drops and then bases, leaving a demand zone around this area. This is drop base rally, so it leaves a demand zone at the base and then rallies up. So after, price will come back, as long as it has broken structure, price will come back to pick some left orders in this demand zone, and then it is going to take them to the previous high. So that is rally base drop, that is drop base rally. So today I'm going to be teaching you the opposite of this, which is rally base drop, like this. So price rallies up, leaves a base at around here, then drops, breaking the previous structure. It is the same thing, only that it is inverted. This is the inverted version of the previous setup. So price breaks this previous high, leaving a demand zone in this area. So the idea is that when price comes back to this level again, it is going to pick those orders and then brings them to the previous high. So the supply zone is going to be left around this area. So when price comes back to this area, it's going to be selling, picking orders that it left here to the previous high. So your entry model is going to be like this. You enter from there, put your stop losses slightly below. Do not put your stop losses so tight like this, because sometimes price tends to come and sweep the liquidity up here with a wick, and then it continues to the downside. That's why you hear a lot of traders say price stopped me out and then moved to my direction. So you don't have to put your stop losses so tight like this. Allow some wiggle room and then target the previous lows, as long as the risk to reward is favorable to you. So that is what I'm going to be showing you on the charts. I'll just clear everything and then we head back to the charts. So we are going to be looking for sales. In the previous video it was buys, so in this video it's going to be sales. So what do? We look at price going up, leaving a supply zone here and then dropping down massively. So this will be a rally, a base, a drop, breaking the previous structure. So this was a valid supply zone, like this. So the zone was like that. However, price broke the structure. Good. Did it rally down? Good. Is there base? Base was there, but price did not reach there to trigger us in and fall. So price just reached here. For some reason it started falling. I think there's a hidden supply zone here that it used. It started falling. So this is a trade that we would have missed. How would the entry model be? It would be like this. Target the previous low, which would be a 1:4, like that. Like that. So price did not trigger us in, but it is already dropping. So now what do we do there? We just leave it and wait for the next setup. Remember, we do not chase. And also I told you, you just have to identify the setup. You don't need to do a lot of analysis. Go to the charts, choose a particular time frame, and then be identifying the setups. When you see the setup, take the trade. Don't fear to enter. Just enter the trade and then let the rest happen on its own. If you miss the trade, don't rush, don't panic, just wait for the next setup. So this one did not work out. It is one that we missed. So let's proceed and see. We see another one here. Now, and the example this is that it is very easy. The good thing about it is that it's very easy to identify the setup, since you're just looking at the peaks and valleys. You look at this valley and then identify when price comes back to it, that is for the buy. But since we are going for the sales, you look at the peaks. Look at this peak and see, do you see a clear supply zone? If you see a rally base drop, then it's a clear supply zone. There's a break of structure. You can identify it and then mark it for the sales when price comes back there. So this one, price did not trigger us in. So do you see any other one? Yes, where do we see? We see a rally, a base, a drop. So a clear indecision candle and engulfing candle. So this is a good supply zone. So mark it. Mark it very well. Mark the candle very well, like that. I think there. Yes, mark the candle very well. And then what do? Wait for price to come back to the area, sell it to the previous low. So now, in this case, the trade would be like this. You'll enter and then target the previous low. Enter here, stop loss slightly above, and then take profit the previous low, which is this one, that is a 1:5, 1,000 pips, and then it could go up to a 1:6, which is 1,600 pips. So this was a successful trade. Then you missed this one, you got this one, and then missed this one. So we proceed. You're just looking for picks only, picks only. So this one is, we have one here. Okay, let's start with this one. This is a rally, a base, a drop. We draw our supply zone to the upside like this. Where is this candle? The candle is big. So this is supply zone that was not triggered all the way. Even this one, it was not triggered. So if it was not triggered, you leave it. You leave it. Look for another supply zone. So I see one here, a rally, a base, a drop. However, this one, it based here, and then this one was tested. Let me show you. This is a rally, a base, a drop. This is an engulfing candle. So you'd mark this one clearly like this. You see, price came and tested this area, slightly tested the area, and then dropped massively. So this one, if you're not keen enough, it is one that you're going to miss, because you see, price tested it with a sniper entry like that, and then bought, dropped, sold massively to the previous high, almost 2,000 pips. Okay, so let's proceed with the one that was clear. We have a small rally, a base, then a big drop. So you'd mark this one, but I know this one is one that you would miss because it was not that clear. But if you could see it, you would mark it, and you see it gave a reaction around, I think, 300 pips. So price came back to this area. Initially tapped in, then tried to drop, still refused, then it went back, tapped in fully, then it dropped. We are supposed to take the previous high, however, price gave us around 800 pips and then started retracing back. So I think it would be stopped out for above break even. So we proceed, just look out for the picks. Now there's one here that did not work out. This was a rally, a base, very big basing, and then a drop which broke the previous structure here, but when price came, just swept through. So now the risk to reward, that is why it works. So this one is 1, 2, we won 2 and then lost 1. So risk to reward should work out for you there. So there's another one here, but now this one, the basing was not clear. A lot of candles around here. This one is one you wouldn't take. The basing was not clear with a lot of candles. Let's get one which is clear. And remember, this is an uptrend, so selling from it, you have to be. Now we have this one here. Have this one here, clear one, clear basing. This one was clear. A rally, a base, a drop. Broke this mini structure here, though it is, we don't count that as a break, but it was a good move away. So it would trigger a reaction. So what you do is you put your entries here, stop loss is slightly above. If you would you had to put it tight like this, you're going to be stopped out. So put stop loss slightly above, but this one was a tricky one. So it target the previous low, which is this. Price came and swept through 900 pips, 1:4. So let's proceed. So this one works mostly if you're in downtrend, so looking for sells, not when you're in an uptrend. So we had one here. This one did not break structure, though it gave a good reaction. It did not break structure. So I think it was one that you would enter unless you're going to go against your rules, and you know that is a disaster. So we have one here, but this one now the stop loss would be high, so it is one that you wouldn't take. Broke structure, and then there's a good move away. Price came back, reacted very well, but where to put the stop loss would have been the problem. So let's continue. There's another here, a rally, a base, a drop. So we mark here very well like that, and then wait for price to come back to the area. Price came back, stop loss is slightly above the zone. Price came back to the area, target the previous high, the previous low. Look, in just one candle, 1 4-hour candle, you hit your target 270 pips, and then it went even further up to around 900 pips. So I think that is all. Just go and back test and see the results you would get, if the strategy would work for you or not. Just have to do a lot of back testing in order to gain confidence in the trade. So I'll end there for today. If you found the video valuable or helpful, kindly like and also share the video, and also don't forget to subscribe to the channel. So that is all for today. We meet in the next video. Bye.